Money used to be free to borrow. When the bank held the interest rate at 0.25%, home prices reached an all-time high before plummeting in 2022. Properties would sell for nearly $1.3 million in this part of Toronto. Prices fell 22% to less than $1 million. Detached two-story homes in this Toronto area used to sell for $1.2 million. They came down 24% to $900,000. The same thing is happening with condos. In the Beaches area, some would sell for $1.6 million. Blows my mind that a high-rise condo apartment sold for $1.6 million in 2022. Prices fell 15% to less than $1.4 million. But why am I showing you these? A few years ago, almost every single Toronto area had an average price that was more than $1 million. There were only 5 pockets in the Toronto real estate market where, if you were lucky, maybe you could find a detached home for less than $1 million. A lot of people would agree that Toronto is filled with overpriced property. But when the bank raised the key interest rate to 5% by September 2023, this created a massive change in 17 Toronto areas that now have average home prices of less than $1 million. This is for all home types, so that includes your detached, semi-detached, townhouses, and condos. And so in this video, I'm going to show you these 17 areas. Why are they important to see? This is so you know exactly where the most affordable homes can be found in the city. So if you're a home buyer, you can see where your budget allows you to take you to. If you're a homeowner, you can see if you're in one of these areas to get a better understanding of how your property value has changed. I'll break them down into 3 locations: West, East, and Central Toronto. Let's start with the West. West Toronto is between Dufferin to Mississauga and from Steeles all the way down to Lakeshore. During the peak real estate market in 2022, only 2 areas in West Toronto saw average home prices of less than $1 million. It's the area that's west of Dufferin, better known for communities like Downsview, Black Creek, Thistletown, and Rexdale. Everywhere else in the West End had average home prices of more than $1 million, but today that's finally changed. The Bank of Canada announced another rate drop of another 0.25%. That's the 6th straight rate drop in just 7 months. It's likely that these areas in West Toronto could see their average home prices climb back up to more than $1 million. There are 2 things that would need to happen. First one is that current housing supply would have to go down. It's currently almost double of what it was in 2022. When home prices reached an all-time high, there were only 864 properties for sale across all home types. That's houses and condos combined in the entire West End of Toronto. Today we're sitting on 1,496 active listings. Now that you realize there's 73% more properties for sale in the West End of Toronto, it makes it kind of obvious why home prices are still down 12.8%. Buyers have more options, and as long as those options are there, home prices will remain relatively low. You have more supply, so then you have lower home prices. But sometime after the existing housing supply is gone, inventory levels go down and home prices begin to creep back up. Now, this is heavily dependent on the Bank of Canada, which is the second factor for the potential of rising home prices. The bank needs to keep dropping the key interest rate, which will happen throughout the year. There are 7 more opportunities this year when the bank could lower the key interest rate. That's in March, April, June, July, September, October, and December. Let's say the Bank of Canada drops the interest rate by 0.25% each time. We would see mortgage rates as low as 2% by the end of the year. That's a huge change from the beginning of 2024 when people were getting mortgage rates of more than 7%. The bank's influence also dropped home prices in East Toronto. This is the area east of Victoria Park up to Pickering and also includes East York. Popular communities include the Beaches, Agincourt, Guildwood, Morningside, and West Hill. There's only one area in East Toronto by the Toronto Zoo that had an average home price of less than $1 million back then. There are now 6 areas that are all east of Victoria Park where home prices have fallen by about 21% to an average price of $942,000. The likelihood for the Bank of Canada to drop the key interest rate another 7 times this year is highly speculative. But there are 2 factors motivating the bank. First one is to stick to the current plan. It's always been the bank's agenda to lower the key interest rate to stimulate the economy as inflation comes down. The second reason is the same as the first reason, but with the focus on what's happening with the US and Canadian trade agreement. Trump's tariffs on Canadian exports could end up increasing costs for Canadian businesses, which ultimately falls back on consumers like you and I. If things get more expensive, consumers spend less money, and this ends up slowing down the economy. If we're spending 25% more on groceries and everything else that we buy on a daily basis, that takes away from the savings that could go towards buying a new home. So the Bank of Canada takes this into consideration. They plan to lower the key interest rate to further stimulate borrowing things like mortgages to offset any negative effect in the event we see a 25% tariff from the US. So it seems that regardless of what happens with the US and Canadian trade agreement, the bank's plan would still be to lower the key interest rate. And if that happens, even the eastern part of the city could see average home prices eventually go back up to $1.2 million. In this part of the city, east of Victoria Park to Kennedy between Danforth and Steeles, the average price today for a detached home is $1,038,000. Just 3 years ago, these properties were going for about $1.37 million. It's unlikely we'll see home prices go back up to those prices before the end of the year, but the question you're probably thinking is whether or not prices will go back up at all as the Bank of Canada continues to drop the key interest rate. I'll share with you my thoughts on what's going to happen this spring at the end of this video, so keep watching. The central part of Toronto has always been the most expensive. It includes downtown Toronto and some popular communities like Rosedale, Forest Hill, Bridle Path, and Willowdale. The average price in central Toronto was $1.25 million at the peak of 2022. The only area in Toronto that had some prices of less than $1 million was downtown Toronto. This makes sense because it's mostly higher density housing, like condo apartments in the city. But now fast forward 3 years to where we are today, and a total of 6 more areas have fallen to less than $1 million on average. Central Toronto is down 13% to $1.09 million. Historically, the bank tries to keep the key interest rate where it's happily floating around the same level as inflation. In 2021, inflation got out of hand and the bank was so slow to react to this. We're now seeing the key interest rate above inflation, and this might continue to be the case if inflation stays at that 2% target as the bank slowly and gradually brings down the key interest rate. People are really curious to know if the spring market is going to be busy this year. And what people are really asking with that question is, will we see home prices start to go up around March and April with more bidding wars happening again? Probably not, and here's why. The Bank of Canada is cautious to lower the key interest rate too quickly. The January announcement of only 25 basis points is a step in the right direction to encourage economic stimulation, but it likely won't have a major impact on the housing market, meaning we won't see bidding wars on every property like we did in 2022. If anything, this is likely to happen as soon as we see a massive drop in housing supply. There are more than 15,000 active listings in the Greater Toronto area right now. A trend in the direction where 51% of these listings getting absorbed is what would ultimately lead to a spring market. But the short answer is that spring is not going to be busy for home sellers. It is, however, an opportunity for home buyers with less competition and lower home prices while they're still around. If you haven't already, subscribe to the channel. My name is Fred Tam. I'm a real estate broker in Toronto, helping you reach your real estate goals. Thank you for watching to the very end, and I'll see you in the next one.